What's up, guys? It's Gerald here. In this video, we're going to go over the top 5 picks going into 2026 here. It's currently December 28th, so ongoing for the next year. What are the top 5 picks through MarketDash? We're going to highlight these 5 top opportunities right now. And the first stock we have here is PayPal stock here. So I'm just going to pull up this report and go over the valuation and weekly opportunity for PayPal stock here. So PayPal here is an undervalued fintech giant with a strong free cash flow and has beat guidance signals, which signals an entry point for this week specifically. And I'm going to go over exactly why here. So PayPal overall presents a compelling value buy after recent market overreaction to solid earnings. It's trading at depressed levels despite robust profitability and steady revenue growth. It has strong free cash flow, expanding margins, and a new industrial bank application, which positions it now for a near-term upside. This is the catalyst that's going to push the stock up higher from current valuations. Average analyst price target sitting roughly around 78.97, which implies an over 30% potential from current levels around the $60 level. So why this week? PayPal stock dipped about 2% to about 60.18 post earnings on December 17 on elevated volume. It's trading currently 24% above its average, which is creating a classic buy the dip moment amid broader market caution, right? This week's timing aligns with stabilization signals from recent quarterly beats with earnings per share of 1.34 versus the 120 that was expected, and revenue that was up over 7.3% year over year, and upbeat quarter four 2025 guidance. Of course, there's negative sentiment on PayPal due to the CFO reporting potentially cautious approach going into quarter four of this year here. So I want to touch on to the investment thesis and go over the valuation opportunity here. So PayPal remains a mature fintech leader with enduring brand trust, right? This is Venmo and has consistent revenue growth year over year, right? So even at moderate paces, countering irrelevant narratives, right? The profitability is expanding, free cash flow is staying strong for flexibility and competition, and a solid balance sheet, right? This is a company with ample cash, this is a company with ample cash and very much manageable debt, which supports the stability of the stock, right? The stock is cannot cannibalizing its share count, so creating a sort of floor for the stock here. The recent earnings stabilization and shareholder returns via the dividends and the buybacks reinforce a patient compounding business model. So at $60, PayPal trades at levels baking in excessive pessimism with strong fundamentals like a 25% return on equity, 14.96 net margins, and analyst consensus targets of nearly $80 here. So this is nearly a 30% margin of safety or 30% away from current valuations, right? This is where I believe there's a much big asymmetrical upside, right? So limited downside and the upside is massive, right? At sitting around 30% here. So bottom line, PayPal is a high quality fintech at fire sale price after an earnings dip. So stock is trading about 30% away from current valuations. The downside is pretty limited. Of course, there is heavy momentum to the downside right now, which does seem to be slowing down. And I'm going to go over the technicals, why I believe a reversal is incoming in the future here. All right, so going over PayPal on the daily time frame here, we see the stock is stabilizing around the 0.786 retracement. Heavy volume has been coming into the stock, and I'm going to be going over the dark pool data here. So looking at PayPal's dark pool data, we've been seeing a lot of steady accumulation, both represented from the volume that we see here, as well as the elevated volume throughout these depressed periods here, right? So I'm going to go touch over, look at these volumes compared to prior. So elevated volume, decreasing volume as it sells off, but still elevated in the sense that there's showing representation of accumulation in the stock here. So looking at the dark pool prints here, I'm seeing heavy volume coming into the stock here. Just about 6 days ago, we had a $72 million dark pool buy at sitting roughly around 59.86. We're currently trading roughly around where we're currently where this dark pool data pretty much came in, right? So there's 9% of the daily volume here. Of course, there is somewhat aggressive sells, but nothing too bearish in the sense that this is only 3% of the daily volume, and as well as 0.5% of the daily volume here. So where the stock is currently sitting at, let's go take a look at this stock chart here. We're currently sitting around over 39, 35 plus percent away from every sort of valuation um, model there is, right? So the intrinsic value is sitting roughly around 96, 94. The DCF calculation is sitting roughly around 98.3. Seems to be all relatively around the same. That relative value is sitting roughly around 95.59. So it's all sitting 30% and above. So this is presenting a good value opportunity in the stock right now. The stock on the RSI level is currently sitting around 40. So not completely oversold on the daily time frame here, but approaching there, right? And I'm also seeing a potential inflection or positive momentum in the stock on the MACD here. So there was some selling off, but the stock was able to overcome that selling pressure. And it seems like buying momentum and bullish momentum is coming into the stock now here. So that's what I see with PayPal stock going into this week. And that's why I think it's one of the better opportunities for this upcoming year here. Next stock we have here is Novo Nordisk, right? So after a sharp 2025 pullback, shares are now undervalued by up to 68% based on a DCF model, right? Strong fundamentals in diabetes and obesity medications, including blockbuster GLP-1 drugs, which includes Ozempic and Wegovy. The stock is trading at a low PE ratio of 13 compared to peers sitting roughly around 16 to 19, right? So this is a good value setup for patient retail investors here. So why this week? Recent market jitters around drug pricing debates, competitive pipelines, and regulatory scrutiny have driven a steep pullback in the stock, with shares down roughly around 4% last week, right? So this creates a timely entry amid year-end selling and profit taking, right? So with a lot of tax loss harvesting in the stock here, we're entering towards the new year. I think a lot of these value stocks are going to present a great opportunity for patient investors as well as for short-term strategies here. So what's the investment thesis for Novo Nordisk here? Novo dominates diabetes and obesity care with flagship GLP-1 drugs that have transformed the sector, backed by top-tier profitability and lasting competitive moat. Despite a slowing growth, steady expansion and massive market supports long-term intrinsic value growth, marking it a quintessential value play where the market underprices quality. So multiple metrics scream that this stock is undervalued. A DCF model pegs an intrinsic value at roughly around 153, which is about a 70% discount to current prices. The stock is trading at a measly 13 PE, with the fair ratio roughly around 30 and an industry average sitting roughly around 19 here. So bottom line, Envo is a standout value opportunity that marks a 68% DCF discount with elite profitability in a high demand sector. So this is both for a buy for the short-term upside as well as long-term compounding here. All right, so looking over the dark pool data for Envo, nothing is extremely compelling. 66 bearish compared to a 34% bullish for the past 14 days or so. Trades over the last 30 days, there's been some low aggressive buys, but nothing too compelling given where the stock is currently sitting at, right? We've had a big push in the stock most recently, and we're getting positive momentum on the MACD as well as getting more overbought on the RSI here. Looking at the stock on a valuation basis, relative value sitting roughly around $90 with the intrinsic value sitting roughly around 72. So nearly a 25+% margin of safety for the majority of these valuation models here. So good risk to reward here. Looks like the stock is approaching major resistances, or short-term resistances, sitting roughly around the 56 area, which is a major supply zone here, as well as right under the 200 simple moving average. If the stock is able to overcome this 200 moving average, which is a major supply zone here, we can see a push towards 72 for the stock here. But yeah, right where the stock is currently sitting at, there's strong momentum coming into the stock with a huge volume bar that came most recently in the past 3 days here. Next stock I have is United Healthcare, right? United Healthcare trades at a deeply discounted forward PE of around 12 to 18, offering about a 20 to 26% upside to analyst targets of 385 to 397 amid strong cash flow and a 2.8% dividend yield. Right, recent Q2 earnings beat and reestablished 2025 guidance signal stabilization after a much tough year, marking this a week ideal for value hunters eyeing short-term catalysts like a year-end positioning. Of course, Warren Buffett took a sizable stake into this company here. With an aging population tailwind, United screams a buy the dip for retail investors seeking that reliable growth. So why this week? This week stands out due to a year-end portfolio rebalancing by institutions holding 88% of the shares, potentially driving that demand for UnitedHealth's beaten down price near 314 to about 332. The stock's currently sitting around 331, 332 as I speak today here. So recent quarter three revenue growth of 12% and earnings per share beats of 2.92 versus 2.87 expected shows stabilizing medical costs while Medicare Advantage repricing kicks in for 2026. So this is a big catalyst for the stock going into the next year. So a lot of tax loss harvesting, a lot of the premiums start going to be repriced for Medicare Advantage going into 2026 here. So the investment thesis for the stock, United Healthcare dominates healthcare with diversified segments like United Healthcare, as well as Optum, generating $20 billion in free cash flow and nearly a 10% revenue growth despite these headwinds here. An aging population adds Medicare enrollees, fueling long-term demand, while Berkshire Hathaway's 5 million share buy signals value conviction, the post the DOJ probe, and the leadership shifts. Any day now, we'll likely get some news regarding the DOJ probe as well. So that'll be a potentially huge catalyst for the stock going into 2026 here. What's the valuation opportunity for the stock here? United Healthcare is trading at a forward PE of 11.95 to roughly around 18, which is below its historical norms, with targets averaging around a 22 to 26% upside and highs to 626, right? So trailing PE of 17 trades at a discount due to its peers, backed by return on equity of about 20%, net margins of 4%, and a debt to equity ratio of 0.71%. So what's the bottom line? This is a compelling short-term value play with nearly a 20% upside, has great dividends, and a 2026 recovery catalyst, which is perfect for a lot of retail portfolios here. Looking at the stock on the daily time frame here, it looks like the stock is rejecting off of that 200, the 50 simple moving average. So it would not surprise me we get a dip towards the golden retracement once again. So maybe a last dip towards the 300s, high 290s before we find a third wave up, right? So a one wave, a two wave, that's potentially towards the golden retracement to a potentially third wave up towards the intrinsic value or major supply zones here. Of course, we are getting negative momentum off the MACD. Looks like the stock is rejecting off of that 50 simple moving average as well as 200. So a lot of resistances up ahead. So if this company is able to, or the stock is able to get above these moving averages, it potentially make its way towards major resistances or towards their fair values, sitting roughly around $486 to even $600 here. Looking at the dark pool data within about the 5 days, obviously I'm seeing a lot of buys recently. So 3% daily volume, 5.7% of the daily volume, 15% of the daily volume here, $192 million buy. So yeah, very, very compelling. I'm seeing a lot of accumulation, a lot of dark pool data coming in for this stock here. So looks like a good risk to reward here, with risk being potentially dropping back to that golden retracement before potentially a move up for the stock here. The next stock I have is Adobe stock here. So what's the investment thesis for Adobe? Adobe has a wide economic moat from a dominant creative cloud and experience platforms fueled by AI adoption. So ARR hit 19.2 billion, which is up nearly 12% year over year. RPO grew about 12.8% and generated credits tripled sequentially, right? The value opportunity for this company, the stock is trading at a forward PE of about 21 with a PEG ratio of 1.4, which is a bargain compared to Morningstar's $560 fair value here. I really like Adobe for a value play here. So it fits a lot of Warren Buffett's style principles, right? So this is a recurring revenue model, right? So digital media AR was up nearly 12%, right? Subscription driving 89% gross margins. So they have very predictable cash flows while the AI moat fends off the Canva or OpenAI threats. Overall, Adobe's sitting roughly around 353, 354 is a standout value buy for me. There's a lot of AI catalysts for the stock. The stock is 57% undervalued compared to the $560 fair value. And let's go ahead and look at the stock on the daily time frame here. So looking at the stock on the daily time frame, there was a lot of heavy bullish momentum post earnings. Looks like we're entering a lot of resistance roughly around the 200 simple moving average here. As you can see here, bullish momentum is inflecting towards the downside. We're getting weakening buyers here. But if we can get a dip towards golden retracement again, it might be room for another wave up for the stock towards the intrinsic value. Looks like intrinsic value is like 32%, 42% compared to the relative value as well. So very, very far away. Good margin of safety for this stock here. Good value buy, in my opinion, here. So looking at the dark pool data, it's been heavily bullish. 71% bullish compared to 29% bearish, with 817 million on the bull side and 335 on the bear side for the dark prints here. Looking at the past couple of days, looks like 8 days ago there's a $26 million buy, and then we had a near $24 million buy, sitting around 2.2% of daily volume. Nothing crazy, but overall, heavy bullish buying prints compared to bearish within the last 14 to 30 days here for the stock here. Lastly, I have Nike stock here. The stock plunged post earnings, sitting now roughly around $61. Of course, we had the recent insider buying with Tim Cook that propelled the stock up like 1 to 2% after that, but it's sitting at decent valuation metrics, which I'll be going over shortly here. So Nike's win now turnaround under CEO Elliott Hill addresses that revenue decline and competition from brands like Hoka, On, and so forth, right? At sitting roughly around $60 here, Nike's trading at a trailing PE of 34, which is above the S&P 500's 29x, but with forward upside to analyst targets that have it 25% above current valuations, and Guru focuses fair value sitting roughly around 92, which is about a 40% upside here. All right, this is a company through Ben Graham's principles buying quality at a discount amid the setbacks, right? Nike boasts a $100 market cap and investment grade credit, offering a lot of safety for the stock. The stock is very oversold on the technicals. There's a lot of capitulation going on in the stock here. So we'll go ahead and touch the stock on the daily time frame to take a look at where the stock is trading at. Looking at this stock on the technical viewpoint, looks like we had heavy bearish pressure in the stock. A lot of it is weakening. We had a big rebound in the stock off of news of Tim Cook buying Nike stock, sitting roughly around like $56 from what I remember. Dark pool data is nothing significant. There is more bearish flow compared to bullish flow here. But overall, I'm seeing a weakening of sellers, and I'm seeing buying pressure come in after these recent insider buys here. Looking at the Bollinger Bands, looks like we got above the lower Bollinger Band. We're seeing resistances might be towards the golden retracement that aligns with that middle Bollinger Band. So that might be an area where you should be looking to take profits as the stock has pretty much gone over short-term resistance, sitting roughly around the $60 level. So might be working its way up towards $64 before a potential retracement downwards towards move upwards for the stock here. So that's my top 5 picks going into 2026. Let me know if you have any other stocks you guys want me to analyze, as well as anything that you guys want me to highlight using Market Dash. Of course, a lot of the credit goes to marketdash.io here. This is where I get a lot of my ideas to find weekly opportunities, really break down the company's fundamentals in terms of looking at where is the stock in the intrinsic value level, where are the hedge funds doing, what's the average Wall Street analyst, what are insiders doing during these times here, and go over basic financial metrics such as revenue, free cash flow, return on assets, as well as taking a look at the shares outstanding, right? Looking at stocks like PayPal having a huge buyback program, visualizing, seeing this cannibalization of its share count. These are how I pretty much go over and systematize how I buy and even sell stocks here.